One of the most weighted events for this week is the ECB meeting and also the Mario Draghi press conference that is going to be in a few hours from now. So many traders are asking how to trade the euro dollar for this event. I'm looking now at the 4-hour chart for the euro dollar, and you can notice here that except this breakout that happened like at the beginning of January, the euro dollar is trading in this range here between 108.00 and 109.80, and the problem in this moment is that the rate action is actually in the middle of the range. So you know, you have to have a strong sentiment, a strong idea of what you think is going to happen with the euro dollar during and after the ECB meeting and press conference, to be able to, you know, to take a trade, because no matter what side of the trade you are going to take, your stop loss should be above 109.80 if you are going to sell it, or under 108 if you are going to buy it. And from current level, that means 100 pips. Another important thing is that you know that during the ECB press conference, the euro dollar tends to go up and down with no clear direction, with no clear idea why to go up or why to go down, and it's not very easy to nail a trade. You could wait and do nothing now, and you could wait for the data to be released, or for Mario Draghi to start speaking. You could place a sell limit order up here or a buy limit order down here, and expect for the market to go up or down to trigger your order, and then to reverse and continue the move. That is very difficult to trade, and you have to, you know, you have to have cold blood. And once you see the euro dollar up here, you have to, and if you have a sell limit order up here, you have to have cold blood and to wait for the trade to reverse. Okay. Another way of trading this, and I'm going to show you on the new platform from 24FX, is to use the options. Okay, and you can use the options like this. Let's assume that you think that Mario Draghi is going to drag the euro dollar down, and that means to sell it. When you buy a put option, the only risk you have is the premium that you have to pay for that option. So I will show you. So this account is a $1,000 account. Okay, it's not a very big account. So I'm going to show you. So the current price is 109.00, and you are expecting for Mario Draghi to say something to drag euro dollar down. So that means you are expecting a lower price. How much lower? This is the key question. So let's assume that you are expecting for the euro dollar to go down to 108. Okay, so what you do, you go here, okay, and you click on the put option, or on the put option down here, and you set up your lots. So I'm going to take 10 lots. That means 10,000 units. That means, you know, on an MT4 platform, that would mean 0.10 lots. Okay, so your strike price is 108. You are going to take this order type at the market, okay, and not a sell limit, but I am just going to take this, and I'm going to buy this put option now. Okay, and I'm going to show you. So the order is now as you can see, it's active now. So I bought a put option with my strike price at 108. Okay, as you can see here, for this option I had to pay $106. Okay, so the thing is, no matter what euro dollar is going to do, during or after the ECB. The thing is this: if the euro dollar is going to go against me, and that means it is going to go up and reach, for example, 110 or even higher, my only loss is going to be this 106.10. okay, I will not have any other cost except this that I already paid. As you can see on my account now, okay, the money are gone from my account. Okay, the thing is, why it's it's a good thing to use options, because as I said earlier, during this event the price is going up and down with no clear direction, and if you use just a normal regular forex trade, you could be stepped out from the trade because of the high volatility in the market, and that would mean that you could see your order triggered, and then you could see your stop loss executed, and then the price to reverse and go in your direction, and that is very painful. Now, another thing that is very important is, if I am right and if the price is going to go down to 108, you will see here the profit. Okay, in this moment it's minus $26, but you will see the profit going up. That means I could have, I don't know, $100, $200, $300. Okay, so I can close this option before the expiration, and from now there are 28 days to for the expiration, so I can close it whenever I want. Okay, so the only benefit that I'm getting from trading the option is the fact that I know my loss. Okay, this is my loss, and it's limited to this. Now, for my trade to be limited to this loss, it means that, and if the price goes against me, it means that I have to keep the trade open until the expiration. It means that I have to keep I have to keep the trade open until 28 days from now. But this is not a problem for me. I mean, I just can leave the trade there and wait for the expiration day to come, and then this trade is going to be closed in automatic. In the same time, and this is allowed to do on this platform, you could go on the other direction. Okay, let's see what is wrong here. Euro dollar. Okay, now let's assume that I think the price is going to go up. Okay, so what I'm doing here, let me take 5 lots. Okay, that means 0.05 lots in the MT4. Okay, so what I'm going to do now, I'm going to buy this. Okay, and I hedge in this way. I hedge the option. Okay, so in this moment, okay, this is my long position here, and this is my short position with the option. So in this moment I'm hedged. Okay, I'm going low on this and short on the option. Now, this kind of strategy, it's allowed to do on this platform, because you are trading two different instruments. Okay, the first one is an option, and the second one is just a normal forex position. Okay, so the thing is, if the market is going to go against me, and so if the market is going to go against me on this position, I mean, if the market is going to go short, I'm just going to close this position. Okay, whatever my loss is going to be, and I'm going to catch the profits here on the option. If the things are going to be the other way around, and the market is going to go up, and the euro dollar is going to reach 110 or whatever, 111, 112, doesn't matter, I will just have to wait for the option to get to the expiration before it is going to be closed. Okay, Otherwise, I will have to cash the you know, to accept the loss that I might have on this option that is going to be larger than the cost. So if I only want to accept the loss of the cost, I have to wait for the option to reach the expiration date. Otherwise, I can close it whenever I want, but I have to accept a bigger loss than the cost. As you can see, for the normal forex position, I do not have any cost. Okay, just see here, and that's for the forex. But please notice the spread 0.4, 0.3. It depends of the moment, but I think this is one of the lowest. 0.2 now. I think that this is the one of the lowest spread that you can get in this market. Thank you for your time, and I hope you are going to have a profitable ECB event today.